Hi, folks. This is Generations, and today, economics one more time. You know, the Bible contains over 2,000 references to economics, and I'm hoping that churches are equipping God's people to every good work in the area of economics, sound money, investment, work, charity, elder care. Every Christian pastor, a teacher, ministry leader worth their salt had better be talking about biblical economics. It's really critical, especially now. Now, I'm kind of a simple guy. God establishes ethics, He defines good. He defines right and wrong. And God said the gold was good in Genesis 2. Well, there it is. The gold was good. Didn't say the crypto was good. He said the gold is good. The value of gold as an economic means of exchange was set by God at the beginning. And by the way, a few other things set in the first 3 chapters of Genesis. So you might pay attention to some of the things mentioned there. Anybody want to debate with God as to whether gold is good? As of today, gold is up 76% year on year. NASDAQ was only up 19%. The Dow gained 13%. Bitcoin lost 8%. Something's happening right now. International investors are fast losing confidence in crypto and really everything else too. And they're shifting their assets to gold and silver. Folks, think about this. $15 trillion of precious metal holdings turned into $35 trillion over 2 years. That's 12% of the world's wealth in precious metals 2 years ago has turned into 28% today. Something's going on here. Silver scraped $90 an ounce just yesterday, up from $5 in the year 2000. Has real inflation been 1,600% since 2000? I doubt it. Back in 2007, 6% of the world's wealth or investments were in gold and silver. Okay, 6%. In 2023, it was 12% of the world's wealth in gold and silver. By the end of 2025, 28%. What's that tell you? It's almost a 5-fold increase on the percentage since the last recession 18 years ago. What does that tell you? Something big is happening right now. The canary in the gold mine is flopping around a little bit. That tells you that people are moving their money into gold and silver, plain and simple, for stability. Investors, banks, national governments are looking for a temporary safe haven for their money. Gold and silver are the most stable forms of money as of roughly 6,000 years. And they're not investments, okay? Gold and silver are money. Money is primarily a medium of exchange and a unit of account. An investment, on the other hand, is an asset held primarily to generate future return. So gold and silver will continue as sound money, that is real money, until the end of time. You can count on that. The S&P price to earnings ratio on stocks also shot back up over 30 in just the last year or two. Last time that happened was 2020 in the 2009 recession, the 2000 dot-com bubble before that, but never more before that. Also, keep in mind the Buffett indicator, Wilshire 5000 per GDP, which is effectively all the assets in the stock market divided by the GDP, has hit 223%. That's about 4 times the historical average back in the day. During the dot-com crash, the ratio hit 135%. During the 2007 crash, the ratio hit 105%. These were the other 2 highs in the history of America. Today, the Buffett indicator is 223%. Somebody say, wow, what's that ticking noise? The ticking's coming faster and faster. Well, a couple of things. The first is this. The problem right now is greed. And let me tell you why. The S&P price to earnings ratio compares the stock value of the companies to the productivity of the companies. It's a great way to determine if stocks are a good value. You might call it the greed ratio. For 70 years, the average P to E, price to earnings ratio, hovered around 13, exceeding 16 for the first time in 1985. Historically, companies were earning about, 6% of the total value of their company in a single year. Between 1995 and 2026, the price to earnings ratio ramped from 13 to 30. Prices were high. Productivity was low for these companies. This means that investors were not really all that interested in the price. Well, they're more interested in the price of the stock. Let me go back. This means that investors were now more interested in the price of the stock than they were in the company's productivity. As stock buyers rushed in to buy more stock, hoping to make a quick buck on the sale, stock prices inflated and companies became less productive. At the same time, companies were borrowing money to invest in their own stock. They hoped that would attract more buyers and raise the price of the stock even more. So the productivity of the nation doubled between 2000 and 2025 on the GDP, and the stock market values increased about fivefold. Over the same period, the options trading also increased 20-fold from $5 trillion to $120 trillion during that same time frame. This means that market investors were 4 times more involved in gambling than they were 25 years earlier. They were far less likely to make long-term investments in a company that proved to be productive and profitable. So let's also look at the aggregated value of all financial derivatives in the market. The number of derivatives in world markets stood at $15 trillion in 1990. That's now soared to $750 trillion. A derivative is a bet on the value of something might turn into in the future. Gamblers will actually pay a certain amount of money to play the game. It's called a derivative. Suppose that your friend and you agree on something. If it rains tomorrow, I pay you $10. If it doesn't, you pay me $10. A derivative is like that. It's a deal that makes or loses money based on how something else changes. So now the most favorite instruments in the stock market is the derivative market, the financial speculation game, the leveraged gaming industry, and that's expanded by a stunning sum of, everybody ready for this, $735 trillion or 50-fold during the last 35 years. That's 4 times the increase of total stock value over the same period of time. So if you're in the betting market, you'll also probably be playing with cryptocurrency. Crypto gets a boost from the Trump election. But here's one more thing, got to keep in mind. The supply of lemmings investing in crypto, I just say that in quotes, investing in crypto has leveled off. It's leveled off at 22% in the UK and the US over the last couple of years. The music is playing faster now in the musical chairs game. The value of cryptocurrency or Bitcoin is established by the demand for the investment and its limited supply. Crypto is not really an investment unless you're investing in air. Most people don't really want to invest in air. But could this work as a currency? That's the big question. Well, our libertarian friends, sound money friends, sure hope so. If it were to serve as a currency, then the public would have to trust it, and everybody would have to accept it as an exchange for goods and services. The problem is trust would depend on long-term stability and value and a universal acceptance. We don't have either one of those, at least so far. By 2026, the percentage of people using or investing in crypto has flatlined at only 22% in the US and the UK. So, in conclusion, we're looking at the greed ratio in markets having increased at least 4-fold in the last 20 years. Wall Street has turned into a casino. And that's not going to bode well for the future of a national economy. Meantime, the national debt to GDP has doubled since the last recession, another indication that the greed ratio has exploded. And the problem is that the economic foundations of the nation are rotting. There's too much deception and cheating at the highest levels. As the Federal Reserve has poured more money into the economy to pay for government debt, the national government has gotten bigger and stronger. But the economy has weakened. So what happens, of course, is governments are printing more money and pouring it into the economy, and they will therefore devalue the money and inflate the price of products and services. That's exactly what has happened in the world economy since 2020. The U.S. Federal Reserve and other national banks issued $9 trillion of extra money into the economy in 2020 and 2021, where only $21 trillion was exchanging hands each year at that time. It's quite a bit of extra money. Of course, the value of products and services increased in the U.S. everywhere around the world by about, you got it, 20% between 2021 and 2026. Just check out your CPI. People stopped saving money as a result. Savings rate has reached historical lows. By 2026, average pay increases dropped below inflation rate, at least for a few years. Reducing inflation required quantitative tightening, which has happened a little bit, and increasing, of course, the interest rates in the process. So the Federal Reserve rate was increased from 0.07% to 5.3% over the last couple of years to try to bring inflation under control. The federal funds rate is the rate banks pay to borrow money, which they lend out to others. So this increase in interest rates for borrowing money was tough on home buyers, as everybody knows, doubling the average cost of buying a home. People could not afford to buy houses, and nobody wanted to sell their homes either because they had out all these loans at super low interest rates. These severe measures have squelched debt spending and accelerated a national recession, a period of 6 months or more where the economy actually decreases. But then where does the mine actually collapse in an economy? So let me end with this. Recessions and depressions begin when an economy built on expectations can no longer meet those expectations. Excess debt, overvalued assets, mispriced risk creates a fragility in the system itself. The credit dries up, employment tanks, asset prices implode, geopolitical strains test the will of investors to take financial risks. And that's exactly where we are right now. Unwise politicians shake things up by radical rearrangements of international business. Of course, that's not happening, so don't worry about that. Confidence in borrowers collapses. Confidence in markets collapse as well. Confidence in government shrivels up, and confidence in the monetary system folds. These are the catalysts that shake the confidence of a nation. So that's the story. But at the end of the day, of course, God is in control of all of this. God actually controls the big dominoes that eventually do tend to tip over. Today, let's move from the macro economy into the microeconomy. I want to have this discussion with a guy named Bill Jack, who happens to be in studio right now. Hi, Bill. Big things happening, Bill. Big things happening in the world right now. And I hope that, I can somehow explain this. I can boil it down such that a 17-year-old could understand what I'm talking about here.
Okay, let's start with that.
Okay.
You said big things are happening, but you used a little thing to illustrate it. You used the phrase a canary in the coal mine, or in your situation, the canary in the gold mine.
Right.
Now,
as a pun. It's a little bit of a pun.
But what does that mean? Because it's a reference that goes back before the time of this generation.
Yeah. Okay. So coal miners would take a canary in a cage down into the coal mines where, there'd be some unsavory gases, methane gases, or some kind of gases that might seep in. And if the canary starts to flop around a bit, so somebody's got to be monitoring the canary.
Right.
I guess you're just walking by the cage, and if the canary's flopping around, and if the canary dies, it's time to get out and get out now.
Yeah, so it's a signal that something is wrong.
That's right.
And you need to evacuate that area.
That's exactly right.
The modern day equivalent would be that you have carbon monoxide sensors in your home.
There you go. Yeah.
Yes.
And when you start hearing the tweet,
you better
the
get
canary's
out.
tweeting.
Yes.
In that case, the canary's tweeting.
Yeah.
If the canary's tweeting, it's time to get out.
To evacuate. So how does that apply to the issue of gold and silver?
Yeah, good question. And it's just a canary. And what we're saying is that I think there's a strong sense that something's about to happen.
It's a signal.
It's a signal, right? And
it's nobody knows foreshadowing.
Nobody knows exactly when it will happen.
But everybody's saying it will happen.
But if there's methane gas seeping into the mine, and I've got 24 guys down there working, the canary better give the right signal. We're watching the canary, and if he's starting to flop around, then it's time to get out of there. Now, same thing applies to investments. As you begin to look at the top investors, the banks, the international banks, and the nations transferring their assets into gold and silver. Why would they do this? And the percent of assets that are being transferred since just in the last 2 years has tripled. And over the last approximately 14 years or 15 years since the last recession, the percentage of the wealth of the world that's been transferred into gold and silver is up approximately fivefold over 18 years. I mean, that's amazing. That means that, when people are no longer trusting the markets or trusting their other investments, they're selling it all and they're putting into gold or silver, or imagine somebody putting it into cash and stuffing it into their mattress. They're not willing to invest in real estate. They're not willing to invest anymore in the stock market. They're not willing to put it into their own businesses anymore. They've got it in their mattress. What does that tell you? When the richest investors, the banks and the international banks, have transferred 28% of their wealth to gold and silver, and that's just happened in the last couple of years. What does that tell you? You follow me? I mean, It tells you that what it tells you is that there is insecurity and an instability about world markets right now, unlike anything we've seen big time since roughly, the 2007 market crash. And in 2007, 6% of the world's wealth were in gold and silver. I might have bumped a bit, over the next 2 to 3 years during that pretty serious worldwide recession. But now at what, $4,600 an ounce and $90 for gold and $90 an ounce for silver, you're looking at 28% of the world's wealth as a percentage of the world's investment in the stock markets now in gold and silver.
Now, I've also heard people say that because of the current situation, you need to invest in hard assets, in picks and shovels, in wheelbarrows, in things that you can use and you can trade.
Tools.
And for tools that you can trade for needed necessities, for commodities, okay, for food, for medical supplies. So how does that work out?
Well, I guess I would see investing in things that you can use for your business as a really good idea. I see that as a good idea. They're hard assets, but they're also tools. Now, I look at gold and silver as not so much a tool because it hasn't been formed into a hammer yet. But I also look at, not using the tools, not using the gold and silver, not investing the gold and silver as effectively taking your wealth, or let's say you take your wealth and you invest it in all these mechanical tools. You dig a big hole and you throw it all in the ground and you bury it and you don't do anything with it. What's the problem with this? In a sense, there's a holding pattern right now. People are looking for safe havens for their assets because they don't want to lose value on their assets. And evidently gold and silver is a holding pattern for that. And I think, any other assets could be that way as well. But I still think it's second best. At the end of the day, God doesn't want us burying our talents. Right. You see that in Matthew 25. So it's a short-term solution. Gold and silver is a short-term solution. At the end of the day, what do you want? You want to put your savings into assets that yield fruit that will be productive for future use. You sure do.
You want to provide for your family.
Yeah.
You want to build wealth, and part of that is to bless others by the spreading of the gospel. You donate to churches and to missionary organizations.
There you go.
And you provide benefits physically for people in need. Family members and neighbors.
Yeah, I talk about this in my book, How the World Runs, and your part in it. The best investments you can do is for the kingdom of God and his righteousness. That's your best investment for time, money, resources, gifts, talents, abilities. Invest in the discipleship of your own children in the home. Invest in your church. Invest in discipleship ministries. Your best investment, whether it be here in the U.S. or Africa, or South America or anywhere else in the world, is to invest in God's interests and what God is doing in discipleship ministries. Evangelism, yes, / discipleship ministries. And to invest in the next generation. And hopefully in a solid ministry in which hopefully there's some, decent resources being spread around the world for the discipleship of the next generation. Ergo, can I just say generations is doing that, but so is Worldview Academy, so are other ministries. Now, in terms of other things you can do in the micro, I would say teach your children to be productive. Give your children tools.
Give them skills.
Give them skills. Give them books.
Teach them skills.
Teach them skills. Give them tools. Give them books. Teach them to be productive. Teach them to work. A good economy is a function of two things. So if you want to build a decent economy, now you may not be able to save the American economy, but could you possibly save your children's future economy? Well, yes. The best thing you can do is teach your children to work. Absolutely. That's one reason why we, produce books like How the World Runs and Your Part in It, Book of Proverbs, study guides, et cetera, because we think this is the day-to-day discipleship in a family economy is a really good way to prepare your children for their future economy. So 2 things that really result in a good economy: the number of people working and God's blessing on the work. Those are the 2 things. If you don't get enough people working, then you're going to have a weak economy. That should be obvious. Now, another aspect to a good economy is you don't just work with your hands, but you work with your head. And so when in other words, you want to be sure that, you're smart with your time. You're smart with the things that you're doing in services and products you're producing. So the more that people work with their head and their hands, and the more people that are working with their heads and hands, you will most likely produce a decent economy. There are certain things governments do to get in the way of that. They discourage work. They produce welfare. They encourage the breakdown of family relationships, the destruction of family, the destruction of a proper discipleship program for children, wrong worldviews taught in public schools, et cetera.
Try to regulate businesses.
Sure, they try to regulate businesses.
Over-regulate businesses.
They overtax. They overregulate. They tax the capital. Capital gains taxes are some of your worst taxes, because typically businesses would take that capital gain and they would put it back into their businesses. So taxing capital gains is a very, very bad thing to do. So governments do a lot. I have an entire chapter on what governments do to ruin economies. Governments do almost nothing to help economies. It's just the way governments are.
Because governments do not produce.
They don't produce anything. They just regulate and they slow everything down.
They steal.
Sure. They're very good at stealing, redistributing wealth, et cetera. Right.
What government does is not help. Government takes.
Sure. Exactly.
Government demands.
So what are the sorts of things that we can do to develop strong economies? Number 1, teach your children to work. Number 2, get out of debt. Get out of debt. The Bible says the debtor is servant to the lender. It actually erodes motivation. It creates more greed, typically. I think most of the greed that's attached to markets today is probably a function of the debted economy, the idea of living off of your grandchildren, great-grandchildren, while you are, of course, using up all the previous capital from previous generations. And this is the kind of thing that happens in the modern economy. So get out of debt. And I've got quite a bit on how to get out of debt, how to stay out of debt, how to pay off your first house at 25, 27 years of age, taking the median price house in America today. And with a part-time job, 20, 25 hours a week from the time you're 16 till you're 26. If you sock that all away and do a little bit of investment with it, you could pay off a house, the median priced house in America, by the time you're 25 or 26 years of age. I've got that in my book, How the World Runs, for 14-year-olds. So I really believe there are certain things that we can do in our families in order to create strong micros. At the end of the day, Bill, it's going to be decent, thoughtful, judicial forms of teaching and equipping our children in good economy that will eventually yield a good economy on the macro level. I honestly can't think that we're going to do that much good with a nation if we can't prepare the next generation to be prudent, thoughtful, wise, hardworking, diligent, and faithful stewards to the good things that God has given. At the end of the day, Bill, all of the things we receive, our talents, our abilities, our raising, our early nurture, our training program that we receive from godly moms and dads who invest so much time into us, as well as initial capital that we might receive from a mother or a father. All of that is the initial talents received by a young person. And what does Jesus want us to do with those talents? He wants us to double them.
Right. Other than your book on how the world works and your part in it, who would you recommend as economists that you would trust? Now, everybody is flawed to some degree.
Yeah.
But who would you avoid in listening to, and to whom would you say, yes, I agree with the principles that this economist is laying out?
Strangely enough, I don't know of that many biblical economists who are out there today. In fact, I was, as I was putting together my book, How the World Runs, and your part in it, I was thinking, is there anybody out there? Now, Gary North was writing on biblical economics in the 1980s and 1990s. So I've drawn some from some of his work. Ron Paul and some of these guys have kind of a free economy way of looking at things and get government out of the way. And so you have some good advice that come here and there. If somebody has some other source of modern Christian thinkers who are good economists bringing biblical economy to bear, that's helpful. I think, David Stockman is a secular economist. He was working for the Reagan administration back in the 1980s.
How about Milton Friedman?
Milton Friedman has some good stuff.
What about Hayek?
Hayek has some good stuff. Okay. Yeah. But those guys aren't alive today. They're gone.
I'm talking those who have
gone before us. Yeah, right.
Written about it.
Some of those guys. Some of those guys were writing in the 60s and 70s and 80s, and I think we can draw from them. They're helpful things. I just wish there was a little more on sensible biblical economy today outside of the curriculum that we provide for 14-year-olds. It's not like I'm some great economist, but I do study Hayek. I study Stockman. I study some of these guys who are pretty thoughtful, and I think they understand the importance of sound money. And we need to get back to sound money. Now, here, let me end with this. What can we do right now? What can Trump do? I talked about what we can do. What could Trump do if there was a shot at salvaging our economy? And I think the most obvious thing that Trump could do tomorrow, Donald Trump, and you know what? I wouldn't put it past him for doing something actually productive and helpful to the nation. He's a little bit of sawed-off shotgun. Anything could happen kind of thing. So I look at Trump like, well, anything could happen. I could count on George W. Bush and I could count on Joe Biden as doing the wrong thing when it comes to the economy. Right. But Trump, it's possible in a crazy moment, he might do something right. Here's one thing he could do. Veto all budgets until they're balanced. He could do that. He could continue to veto all the budget bills until they're balanced. That's one thing he could do tomorrow. He could reinstitute the gold standard. Well, it might take a little work from Congress. He could dismiss the Fed, not just the chairman. He could kill welfare altogether and get rid of the minimum wage. That would do something for the nation. Now, of course, he needs help from Congress, and it's doubtful that you're going to get much progress made on fundamental issues. It's probably too painful. Yeah,
right.
You're probably right.
Right now, Congress is putting Band-Aids on hemorrhaging elephants.
Yeah,
and
exactly.
They don't want to put the tourniquet on. They don't want to do major surgery.
They don't want to cut his leg and then put the big old tourniquet on the elephant. Yeah, and so at the end of the day, it's going to be by the grace of God that we see anything salvaged out of this economy. It's a tough deal. It's a tough deal. But at the end of the day, again, what are we doing? At the end of the program, what are we doing? Well, we're telling you as listeners to give your children a solid biblical foundation in all of these subjects: science, history, apologetics, finance, and economics. Raise your children in the principles of God's word. In fact, this is the one thing I've said many times at conferences all over the world. I said, you know what? I don't know what the future holds, but you definitely want to prepare your children for it. The best thing I can tell you is grab the book of Proverbs. I mean, if there's one thing that I could tell you, the wisdom of God that dates back 4,000 years is absolutely going to stand you in good stead, no matter what happens in the future. Prepare your children for the future. Your children may have an opportunity to rebuild human society, politics, government, economics. I'm not just a doomsdayer. I'm just saying we're going to go through some trials, but coming out the other side, if we train our children to be leaders and be rooted and grounded in right thinking about all these subjects, they may have an opportunity to save a nation or to save a society or save an economy sometime in the future. Just give them the right stuff. Start with the book of Proverbs. You don't have to buy any of our stuff. You'll find it actually online. You find the book of Proverbs online. But just in case you want to expand that, we've got our Proverbs Bible study guides and how the world runs and your part in it. I'd recommend this. I wrote it for 14-year-olds. I think 14-year-olds can understand quantitative easing, and I think they can understand the Federal Reserve and fractional reserve banking. I put it in the form of allegory. such that a 14-year-old can understand it. And I think a 14-year-old can understand that if you've got a $21 trillion economy, Bill, and you throw another $9 trillion into the economy and you have 20% inflation a year or two later, it's a no-brainer what happened. A 14-year-old can understand that. But Bill, I'm here to tell you that about 99% of Americans have no idea what happened in the last 5 years. There are those who make things happen. There are those who watch things happen. And then, Bill, there are those who wonder what happened. And our goal on this program is to be sure that nobody will wonder what happened. Because we got to be like the men of Issachar.
Yep.
They understood the times so that they would know what to do. And that's what we attempt to do on this program, Bill and I. Thanks, Bill, being part of it again on this edition. And friends, let me invite you back again next time as we continue to lay down a vision for the next generation.